Let's get a look at the markets with one of our regulars, Jason Del Vicario, portfolio manager at Hillside Wealth Management at IA Private Wealth. Jason, thank you very much indeed for coming on the show. I know I don't know if it's a sore point with you, but it's a thing you do like to remind our viewers. We talk a lot to guests who predict the near-term movement of the market, but you think that's largely a waste of time. You think just buy good companies, hold on to them.
How often do you speak with them 6 months or a year or 2 years after they've made the prediction to check back to see whether the prediction was was correct or not? Yeah, I mean, listen, if you're going to market time, you increase the amount of decisions that you have to make correctly. So when you decide to sell and say go to cash, you've got to decide at what level to sell and the timing to sell. That's two decisions. And then, of course, assuming that you agree that being in cash long term is not going to be a great way to grow wealth, then you have to get back in. And getting back in, you have to decide on the level again and the timing again. So that entire transaction requires 4 correct decisions to make. And then if you're going to make this a long-term strategy, multiply that by 5 or 10 times, you're now upwards of 40 decisions that you have to make accurately. Whereas if you just buy high quality, predictable businesses and hold them for the long term, you really only have to make a handful of decisions. So we're big fans of reducing the amount of decisions that one has to make because, of course, that increases the probability of being incorrect.
What lessons do you think we learned in the market, though, in 2024? The AI euphoria powered markets higher, for one thing.
Certainly. I think maybe one of the lessons that investors hopefully will have learned, perhaps not necessarily in 2024, but ideally prior to 2024, such that when they're presented with a market or a theme such as AI, that they're able to sort of keep a level head and focus on the long term. Look, AI, much like the internet, much like air flight, much like other innovations, the printing press, they were at the time, it was obvious that these were going to change the world. So I think we can agree that AI will change the world. What we don't necessarily know is who are going to be the beneficiaries from a shareholder wealth growing perspective or creation perspective. And in our view, that's still very much up in the air. So this AI boom does certainly feel a little bit like it did during the tech bubble of 2000 and so on and so forth, where it's not obvious who the winners are going to be at this point.
What about Canada right now? We do have this prospect of tariffs. I know you don't trade on political headlines, but are you tempted to move money out of Canada with this threat hanging over the economy?
That's an interesting sort of chicken or egg question, because we own 20 pieces of 27 businesses in our Hillside portfolios for clients. And of those 27, only 3 are in Canada. So it's almost as if we made the decision to not be so heavily invested in Canada 5-10 years ago. But of course, it wasn't necessarily because of tariffs or the dollar or the political situation or inflation or what have you. It was more really a reflection of the fact that we find there are very few businesses in Canada that fit our very strict selection criteria, namely that they are founder run and have produced and shown the history to produce above average and consistent levels of return on capital. And we don't see that dynamic has changed today. And I imagine if these tariffs go through, the number of securities that we'll find attractive will perhaps even be less.
What about the banks, Jason, the Canadian banks? Because obviously among the biggest questions for any Canadian investor on their domestic portfolio, do I overweight, do I underweight the banks? They're such a huge part of of our market. Are you finding value in the Canadian banks right now?
I mean, that might be a better question for some of the other guests who own the banks. We don't own any of the Canadian banks. Simply, again, because they are not founder-run, not founder-owned. They don't have that level of return on capital that we look for on a consistent basis. The moat of the Canadian banks is well understood, except for the fact that it is a regulatory moat. Now it's been there for, let's say, over 100 years, but it's very difficult for people who are thinking in terms of decades like we do to predict whether or not these charters will have the protection of laws in 10 or 20 years. So I'm afraid I can't give a better answer than that, other than we don't own any banks.
You have some stock ideas for us. Constellation Software, it has been your number one holding for many years. You're sticking with this one?
Absolutely, yeah. So the three names that we will chat about today are positions that we have owned since our inception in 2014. So we just got our 10-year performance numbers in September of 2024. And the point being is that I really wanted to tie these picks into the fact that we not only talk the talk about not market timing, but we also walk the walk. Constellation is a fabulous business. And yes, it's been our number one holding for 10 years and continues to be in that position.
Meta, you like the fact that Zuckerberg is still very active at that company?
Absolutely, yes. Comes back to our key point here of being founder-run, founder-owned. We also like to pick winners, as in not who is going to win. We like to pick winners once the race has started. And so Meta is the dominant player in social media. And we think that with them having in excess of 3 billion users globally who go onto one of their apps, be it Instagram, WhatsApp, or the Facebook, that is a huge moat. And we do feel that they will be able to compound capital and leverage that moat for many, many years to come.
And Alimentation Couche-Tard, you're sticking with this one?
Absolutely, yes. Another fantastic company in our top 10. Meta is our number 2 pick, our number 2 holding, I should say. And we've also owned Alimentation Couche-Tard since 2014. So here are 3 stocks that combined make up nearly 30% of our positions that we have held through pandemics, high inflation, high interest rates, Republican, Democrats, liberals, et cetera, et cetera. Again, I really would love viewers to be focused on the long term, focus on high quality stocks. And as long as the compounding continues, as long as those return on capital figures, let's say, remain in excess of 20%, don't touch it. Let the compounding work its magic. And so I hope everybody has a wonderful holiday season and all the best in 2025, and focus on the long term.
I do like, sorry, before we let you go, I do love this anecdote.
Absolutely.
You have over a 10-year period. Fidelity looked at the accounts that had done best, and many of them were people who had died or had forgotten they had the account. So just leaving your stuff alone can be the best thing.
It's amazing. Yeah. If any of the viewers want to Google it, like you said, the study that Fidelity conducted had really an unexpected result, that the people that had done the best, so they looked through all of the people that had exceptional returns, they were either dead or they'd forgotten they'd had the account. So yeah, point taken.
That's amazing. Jason, have a wonderful holiday and a great 2025. Thank you very much.
You too.
Jason Del Vicario.